Because Tesla has reported its lowest profit margin in more than 5 years. Missing expectations on Wall Street. The car maker been forced to cut prices in recent months to compete with rivals, and it's facing fresh challenges from legacy car makers in the US and elsewhere. Well, the company's CEO Elon Musk has said he would be shocked if his self-driving cars aren't ready to operate without human supervision on the US roads by next year. Well, we can hear more now from our New York business correspondent, Aaron Dello. Tesla shares spent most of the year sliding between lagging sales, production snarls, shipping delays, and increased competition from overseas EV makers. Then shares started gaining. They were up 40% since the end of May. Investors started focusing less on Tesla's slumping EV sales and more on Chief Executive Elon Musk's plans to make Tesla into an artificial intelligence powerhouse with AI-powered robo-taxis and humanoid robots. Alluring, yes. Profitable, no, or at least not yet. Tesla unveiled its second quarter earnings Tuesday after Wall Street's closing bell and reported a 45% drop in profit between April and June. That came in lower than analysts had estimated. Sales fell nearly 5% in the second quarter and production fell as well. Now investors are left to see whether Tesla can successfully rev up its lagging car sales or begin monetizing its AI offerings fast enough to make up for it. So that was Aaron Delmore there on those Tesla earnings. While Seth Goldstein is an equity strategist and chair of the Electric Vehicle Committee at Morningstar, he explained investors' reaction to the latest results. We see shares were down about 8% in after-hours trading, and that was partly due to the earnings per share miss, but I think it's also partly due to the fact that Tesla really didn't offer any concrete guidance. We heard more of the same, that self-driving will be ready by the end of the year or next year, which we have heard multiple times before. And given that we've seen an AI field rally in recent weeks, I think we saw investors potentially throwing in the towel to some extent and saying, let's wait till Tesla shows tangible progress before we really get enthusiastic about Tesla as an AI play. It's interesting because Elon Musk, he's saying that actually rivals have been cutting their prices, so these results are a bit of a hangover. He said of that, how much you think that is accurate? Well, we have seen an intense EV price war, especially in China, which is one of Tesla's biggest markets outside the US, and so we've seen Chinese EVs being exported to Europe, where we've seen price wars there too. And so there are a lot of automakers cutting their prices as a way to gain market share, especially in EVs right now. So that is true to some extent, but at the same time Tesla is still in the luxury vehicle category. They're not the affordable vehicle category yet, and we've seen more and more affordable EVs that have similar specs as far as range and performance to Tesla's luxury vehicles, which makes Tesla a higher price option for many consumers. Yes, and in terms of what's been going on in the last few months, it's been quite a few sort of eventful few months for investors. They moved their base in Austin and also they improved this sort of massive pay deal for the boss, for Elon Musk. Do you think that might leave a slightly sour taste in people's mouths? Well, investors overwhelmingly approve both of those measures, and so I think if you are a Tesla investor, you believe in Elon Musk and you believe in his leadership and his vision, and think that he was able to grow the company from the original 2018 pay package to where it is today, to a profitable automaker, which is something that's very difficult to do. We've seen many automakers filed bankruptcy because they were not successfully able to mass produce vehicles. So I think Tesla shareholders who are in it for the long term are still backing Musk, but at some point Tesla will need to show progress on its AI front and start to show progress on the unit production cost to get its profit margins back to where they were previously. And broadly in the vehicle market, we're seeing the likes to say General Motors that posted yesterday pretty strong results, and we saw some big stock moves there. They're investing in their own EV capabilities as Well, yes, they are other, you know the. They're launching the Bolt other. They're launching multiple EVs. Throughout various price points, you know. GM has been talking about EVs and investing in EVs for years and we're starting to see more and more production. And the plans for turn into actual sales and growing volumes. And we're seeing so far pretty good consume uptake for the EVs.